Welcome to your Mortgage Insider Update. It is October 28th, and we have a monster mash of data coming out this week, starting with the JOLTS report on Tuesday, the ADP, the payrolls report from private payrolls on Wednesday, new jobless claims on Thursday, which has been trending much higher, and then the Bureau of Labor Statistics jobs report on Friday, along with the PCE, Personal Consumption Expenditure, inflation report. This all comes 1 week before the Feds get together next Wednesday and Thursday for their Federal Reserve Open Market Committee meeting. It's still widely expected for a 25 basis point cut in short-term interest rates from the Federal Reserve. The markets have basically reacted really negatively to the last jobs report. So the whole month of October has really just been on a stair-step climb higher with interest rates, which we're going to see here in a minute. Can that turn around on Friday? Was that an anomaly, or is the jobs market doing better than previously thought? We'll find out. We start today with the 10-year Treasury bonds up 3 basis points at 4.26%. This is significantly higher than just a week ago. We'll take a look at the 6-month chart. We can see the blue line, the 200-day average. This last week we breached above that and now creates a kind of a floor of support. The trend is above that 200-day average, which if we look back 200 days, we can see it's been a while since we had 10-year Treasury rates in this range back in July, before we started to really taper off that level right here. July 25th would have been the last high point that we actually saw a drop in rates from that point forward. We're right at that level right here, coming into this big week of the JOLTS report, which is jobs openings on Tuesday, as well as the private payrolls, and really the Bureau of Labor Statistics is the creme de la creme of reports. And that's what we saw at the beginning of October. That report came in at 224,000 jobs created. This was a trend much higher, about 100,000 jobs for the month of September, I should say. The report was given on early October for September, showing more than 100,000 increase in jobs. Will that be the trend this time, or will we get a revision back down to under 200,000? Those are going to be the questions we'll find out on Friday. We'll come back to you next week on more details there. Besides economic reports, the other elephant in the room is there is an election taking place just this next week. So we'll come back next week with the jobs information and give you a heads up on what to expect with the Federal Reserve meeting next Wednesday and Thursday. They pushed back the Federal Reserve meeting to give way for federal elections on Tuesday. So it could be a volatile few weeks. We can see we've been in an upward trend. Will that upward trend continue? Some say that the election could have an impact on that. More than likely, the economic data coming into the retail sales season, Christmas holiday shopping season, that's really going to drive the feeling, the consumer sentiment. And really, consumer sentiment is when you see interest rates fall, it's usually because consumers are scared or pulling back and not purchasing. That deflates the economy, creates lower inflation. So we will see in the next week. Make it a great one.